For the first time, Saudi Arabia is turning to the debt markets to prop up its finances. Its first international bond sale is estimated to be the biggest emerging market debt offering in history. The world's largest oil producer has been hit hard by the fall in crude oil prices over the past 2 years. Now, this has created the kingdom's biggest budget deficit in 20 years. The government has had to cut public spending dramatically. Experts believe the sale will be worth more than $17 billion, making it the largest issue of international debt in the Middle East. And it surpasses Argentina's record $16.5 billion emerging market bond sale earlier this year. Martin Bakardakis is the London bureau chief for TheStreet.com, a US-based financial media group. He joins us live now from London. Welcome back to the NewsHour, Martin. Will this work?
It's a good question. It's certainly going to be an attractive and successful issue. I think your lead-in suggested all the reasons why it's a very important issue for the kingdom, but I'm just staggered by the numbers that we're talking about. The last news that I was able to find this morning suggests that investors were willing to bid almost $67 billion US dollars for the $17.5 billion that are going to be sold today. So that does suggest tremendous demand for the issue, and probably speaks to a few of the strengths of the economy in the global context. I mean, understanding that oil has fallen significantly in the past couple of years, Saudi Arabia still produces more of it than anybody else. That's a lot of dollars flowing through, and that's a lot of investor comfort.
Who buys debt? What do they do with it? And when you've bought debt, where's the profit margin for you as a purchaser?
That's an excellent question, a whole series of them. If you are a debt investor, what you're looking for is security above everything else. And as a result, you're going to take a return on your investment that's a little bit lower than you might take if you're buying a stock or if you're buying gold or something else like that. Now, the securities that offer the most security, the most safety, are U.S. government bonds. So when you are looking for an investment outside of the United States, you want something that's reasonably the same in terms of risk, but offers a little bit higher return. The Saudi bonds, for instance, that are going to mature in 30 years will give you a return that's about 2.5% higher than what you would get if you invested in U.S. government bonds. So the return is spread over the lifetime of the investment, but nonetheless gives you an income each year that gives you a little bit of safety.
Is that concept of risk, is it relative, or is it offset by what people were saying when the oil price, went down to $40 a barrel? Because some people were saying, look, the Saudis are fine. They've got 150 billion socked away in a little bank account someplace, and they can deploy that if needs be. And yet the finance ministry in Riyadh seems to have decided, no, we'll leave that as is, and we'll go with this debt relief package.
Yeah, it's a good point, actually. I think it's a smart decision as well, because you're looking at ways in which the kingdom is trying to extend itself to the global financial markets. This bond issue is kind of one way to do it, and there's also discussions of them floating a portion of Saudi Aramco, the world's biggest oil group, onto international stock markets. That would immediately become the most valuable company in the world, topping Apple, topping Google, topping everybody else. So if the kingdom is ready to take these baby steps into international markets, that will go a long way to establishing good relationships going forward, and that will make it easier to raise money in the years ahead. And if Saudi does things correctly and oil prices stabilize, they may never have to touch that $150 billion that they have socked away.
Interesting times. Martin Bakardakis from TheStreet.com. Many thanks.
Thank you, Peter.